Hello and welcome to Between the Lines, the podcast that brings you deep insights into the evolving insurance and reinsurance landscape across Asia Pacific. I'm Mithun Varkey, Editor-in-Chief, and we are recording here in the Hong Kong newsroom of InsuranceAsia News. Join us as we unpack the biggest headlines and give you an exclusive preview of our upcoming stories. This edition features TA Ramalingam, CEO of Valueattics Re. Rama is the founding chief executive of the Fairfax-backed Indian reinsurer, one of the few new entrants we've seen in the Asia-Pacific reinsurance space in recent years. Valueattics Re stands out as India's first private sector reinsurer, and just over a year into its operation, it has already delivered a strong performance, including a notable showing at the recent 1/4 renewals. In this conversation, Rama reflects on the company's early journey, outlines its strategy and ambitions, and shares his perspectives on the broader Indian insurance and reinsurance market. It's a discussion well worth your time.
The focus will be on building a sustainable portfolio. We are not kind of chasing the top line as of now, because we believe that we want to steady the ship first, consolidate our position in the market, and then go for numbers as we get settled over the years.
Joining this episode is the InsuranceAsia News editorial team. With me is senior correspondent Aidan Gregory and reporters Joana, Nguyen and Roshan, Nambiar. Welcome, everyone.
Thanks, Mithun. It's great to be back.
Great, let's get started. This week, a powerful 7.8 magnitude earthquake struck off Mindanao in the southern Philippines, killing at least 45 people so far and injuring hundreds. The strongest quake in decades in the Philippines has caused severe damage. Joana, can you tell us what's happened and what the impact of the cat event has been?
Right. So we have seen a lot of horrifying footage on social media showing, houses and buildings collapsing with residents in great distress because of the earthquake on Monday. At least 45 people were killed and 41,000 have been displaced. In terms of property damage, 200 infrastructure facilities, including hospitals, schools, and bridges, have been damaged, along with nearly 3,000 houses. The full scope of the insured losses remains subject to ongoing assessments and is not yet quantified. We are getting in touch with loss adjusters in the countries to, understand the extent of the losses. Rating agency AM Best published a report this morning, 2 days after the event, and expected that this is going to cause multi-line economic losses due to commercial and residential properties damage, as well as significant infrastructure disruption. Reinsurers are expected to absorb a share of the insured losses, but then, these should be low due to the country's big protection gap.
We've actually just got an update from that story from a loss adjuster in the Philippines, and they noted that the current government estimate of approximately US dollars 250,000 or 15 million pesos for the quake should be regarded as highly preliminary, and this is highly likely to escalate once the full extent of losses are known. We will also continue to monitor these developments closely and update as further information becomes available.
Thanks, Roshan. Yeah, I know you're talking to loss adjusters, brokers, insurers in the market, and I'm looking forward to those updates on what the extent of losses are. It is certainly one of the biggest earthquakes we've seen in recent years, and the fact is that the earthquake happened in Mindanao, which is not one of the biggest cities, so losses will be limited. But still, given the low insurance penetration in some of these markets, we've seen damages to bridges, airports, and some of the commercial establishments. So it's likely that these numbers will continue to grow. $250,000 US doesn't sound like much, but it's likely that the number will be much more. Moving on from the earthquake, we had a string of major exclusives this week. Aidan, you've written a few big people moves and some other developments. Can you walk us through the biggest stories of the past few days?
It has been quite a lively period for people moves in the region. I think perhaps the biggest story for us in the past week has been around the closure of BMS's Hong Kong office. There's been mounting speculation in the market for a while that this was going to happen ever since they closed their Japan and South Korea offices last year. And everybody's kind of been wondering about what the future of BMS in the region is. And last week, we managed to confirm the broker has decided to close its Hong Kong office and shut its private equity M&A and tax practice in Asia as it retrenches to focus on facultative reinsurance and financial lines. And this restructuring meant that former BMS Asia CEO Sandra Lee left the firm, and it turns out that she was headed to Lockton in a senior role. After our story last week in the BMS statement, Lockton subsequently confirmed that Lee has joined the firm in Hong Kong as Chief Growth Officer for Risk Solutions in Asia. There was certainly a lot of interest in this story, and it was our most well-read story over the past week. So that was a good one for us to get out there. There's a lot of movement going on in the M&A insurance broking market in general. Sandra Lee obviously is quite an important figure within that market, but there's been lots of hiring going on. There's the entire team of people recently that left Aon to go and join Howden, and Lockton's been scooping up talent too. On Wednesday this week, we reported that William Zhao has rejoined Marsh in Australia as senior M&A advisor within its private equity and M&A team. And Zhao was previously head of Gallagher Australia's transactional risk practice. Speaking of Marsh, we also had another Marsh-related exclusive last week in Hong Kong. Christopher Chung has joined the firm as a Impro Asia Regional Digital Assets and Hong Kong Growth Leader. Chung is a very well-known name in Hong Kong's cyber insurance market. We reported that he left AIG earlier this year, and we've now also broke the fact that he's joined Marsh.
Thanks, Aidan. That was quite a few fantastic stories and very widely read as well. Transaction liability insurance seems to be very hot with all the people moves going on both in Australia and the wider Asian region. But what's also hot at the moment is M&A in insurance, and this especially in Australia. We've seen a couple of deals announced in the last few days. Roshan, can you bring us up to speed on what's been happening on the M&A front in Australian insurance?
Definitely. There's been a wave of deal activity in Australia, and as we record today on Wednesday, Australian broker Steadfast has received a $5.4 billion takeover approach from Amwins Group and Dragoneer Investment Group. The non-binding proposal offers $6 a share in cash, a premium of more than 50% to Steadfast's last closing price. Steadfast has granted the consortium 8 weeks of exclusive due diligence as it considers a potential full acquisition. And under the proposal, Dragoneer would acquire the retail broking business, while Amwins would take the underwriting agency arm. The board of Steadfast said it would unanimously recommend a deal, subject to a binding agreement, no superior offer, and any other regulatory approvals. Continuing with Australia, Allianz Partners is set to acquire a large portion of travel insurer NIB's portfolio across Australia and New Zealand in a deal aimed at expanding its regional footprint. The company says that the move will position it as a leading player in Australia's travel insurance market, giving it greater scale in what it calls a fast-growing region. And finally, Australian cyber specialist Emergence Insurance is taking over the renewal rights to Blue Zebra's cyber insurance portfolio. From July 1st, all renewing Blue Zebra cyber policies will transition to Emergence, with brokers receiving renewal notices from June. And as part of the deal, Blue Zebra's head of cyber, Aaron Langmaid, will join Emergence in July as well.
Thanks, Roshan. Certainly all the eyes will be on the Steadfast deal. That's quite an interesting deal, actually. Late last year, there were reports that a private equity firm, Blackstone, was bidding for Steadfast, but then the company later came out and denied that they received any offer. So Steadfast has been in play for a few months. So has AUB Group, its primary competitor in Australia. So it'll be an interesting market to watch. So thanks, Roshan. It was a deal that we'll be closely watching in the coming days. Moving on, we had some really interesting stories. I sat down with Victor Cook, the new CEO of Peak Re, and also spoke with Franz-Josef Hahn, the former CEO and founder of the Hong Kong reinsurer, on the leadership transition and what it means for the company going forward. And quite an interesting conversation that I had. I met Victor at the Hong Kong Jockey Club for a long chat a few weeks into his taking over as the CEO. For Cook, obviously, it was the move to Peak Re was both a personal decision to be back closer home after many years in Singapore, where he led Swiss Re in Asia. And for him, as he puts it, it's an entrepreneurial challenge. Peak Re, as we know, is a standout reinsurer based in Hong Kong, was, in the 15 years built itself a brand and a place for itself. Victor Cook, I think, has big plans for the reinsurer. He's made it very clear that his ambition is to transform Peak Re into what he calls a truly global player. That will mean expanding into new markets, developing new products, doing more than what it has been doing so far. And I spoke to Franz, who founded this business 15 years ago. It was quite an interesting chat with Franz as well. He was telling me about building that business and why he thinks that it's a good time for a transition. he said this is the appropriate moment for a succession that brings sort of fresh perspectives into Bakery's trajectory. And I think the foundations are strong, as both Cook and France puts it. It's indeed the next phase for Bakery's growth. Certainly interesting story. I'd highly recommend our readers to check the stories out. Another interesting story, we had a look at the growing interest in sidecars among Asian reinsurers. Aidan, can you walk us through what's driving that trend and why it matters now?
It was great to see this story finally out this week. It was one that I enjoyed working on. And after the Insurance Authority event the other month, where we confirmed that Hong Kong's insurance regulator is working on a regulatory regime for sidecars in the territory, we spoke to reinsurers and advisors about their views on the looming changes and what they would like to see from the new regime. And it's worth mentioning, this comes after Hong Kong has built a regulatory regime for catastrophe bonds from scratch over the last 4 years, and allowing sidecars in Hong Kong is very much seen as the logical next step in terms of the development of Hong Kong as an ILS jurisdiction. And based on the conversations that we've had with market participants about this topic, there is genuine enthusiasm for sidecars here, and people see a lot of potential for them. They want to be doing these deals between reinsurers and private capital, and sidecars are seen as a tool to help solve Asia's protection gap by funneling more private capital into the region's reinsurance market. It's worth saying that Hong Kong is a major asset management hub in Asia, and there's significant private wealth sitting here, which, given the right conditions and regulation, could be channeled into the reinsurance market. And this also fits strategically within Hong Kong's role as a capital formation hub within the region. So it's potentially some very exciting changes afoot. There's significant appetite for sidecars, both among reinsurers based in the region and potentially from investors too, who would get more diversification into Asian perils if there was more issuance locally. So it's certainly something to watch.
Thanks, Aidan. It was indeed a great story. As the story notes, Victor Cook of Bakery as well said that sidecars is certainly something that Bakery will consider, and so we will certainly see some sidecar initiatives from the reinsurers in the region. Great work, everyone. Before we wrap up, let's give our listeners a quick preview of what's driving the agenda in the InsuranceAsia newsroom this week. Joana, what are you working on this week?
So the government of India has launched a maritime insurance pool last month in response to the conflict in Iran, and has issued its first policies to Indian shipping companies. A local report quoting a government official has said that the pool has reduced hull war risk and cargo war risk premiums by around 27% and 48% respectively compared to the pre-conflict levels. I felt this is very interesting because normally when I speak to marine insurance people, they say that the impact on pricing of those newly formed marine risk pools by governments is pretty limited because the majority of policies are backed by the London market. So I plan to reach out to marine brokers in India, to ask them if this is actually the case.
Thanks, Joana. That's a steep decline, so it's about checking if that's really materialized. Roshan, what are you working on?
For me, I actually got very interested in Munich Re's report about the weather in Asia Pacific, which they released last month. So early signals in that report said that 2026 will be even more volatile than 2025, and the climate swings from El Nino are only going to keep intensifying, and APAC renewable insurers will have some say as the stress this may put on assets will only increase. The challenge now is whether the market can keep up with this accelerating risk and stress on these assets, and I'll be reaching out to brokers and insurers to find out more about this.
Thanks, Roshan. Aidan, what do you have on your plate?
I'm due to interview Jason Balding, the CEO of Gallagher Securities, this week. Should be quite an interesting conversation, given everything that's been going on in the global ILS market. We had record catastrophe bond issuance last year, and obviously the sidecar market's also doing really well. So it would be a good opportunity to discuss some of the themes that we mentioned.
Thanks, Aidan. That sounds like a red hot news list. As always, there's a lot to get on with. Thank you all. Fantastic meeting. Let's get back to work.
Thanks a lot, Mithun. Thanks, everyone.
I'm joined today by TA Ramalingam, an industry veteran and the chief executive of Valueattics Re, India's first private sector reinsurer. Backed by Fairfax, the company has already made a strong impression in the market, writing both facultative and treaty business, with clear ambitions to establish itself as a significant long-term player. In this conversation, Rama outlines his vision for Valueattics Re, how he sees the business evolving, and shares insights on what remains a highly dynamic and competitive Indian insurance and reinsurance landscape.
The background to this interview is that India has not had any domestic reinsurers apart from the state-owned GIC Re. So I was curious as to the background of Valueattics Re and the opportunities the company sees in the market.
Yeah, I think one is that we only had GIC Re, which was the local Indian reinsurer, and for many years we have had only the FRBs, especially the likes of Munich Re, Swiss Re, SCOR, Hanover, and things like that. And if you look at the reinsurance market, it used to be around maybe a 1 lakh crore, 100,000 crore, maybe 2 years back. And obviously, the kind of growth that is happening in this line, it is going to grow in a big way. I think last year was around 1 lakh 20,000 odd crores. This year we expect to grow by another 10 to 11%. When you look at the direct side also, the market is growing at 8-9%, and which is, I think, one of the biggest growths which are happening across the world. So I think one is the underpenetrated market, and RI market is also underpenetrated, with where there were only around 6 or 7 companies, including the GIC. So it was felt that there was a need for more reinsurance companies to come in, and being an Indian reinsurer has its own advantages, and that was why it was felt that considering also the long-term growth fundamentals of this industry, it was felt that we should have one company, which is basically a local company, to come in to make the best possible advantage of the situation as of now, and that was the reason that was coming in.
And when did it take shape? I mean, this was in response to the regulatory changes we saw a couple of years ago, where the collateral requirements, etc., or this was always a plan. It was in the making, respective of the regulatory environment.
So actually, the initial seeds took a long time back. It was in 2017 or 18. The application for a license was put across.
Okay.
There were a lot of iterations that happened, but then in between COVID happened in 20, and so I think everything came to a standstill. And in the meantime, the promoters were also busy with their own trying to look at the life company. So they wanted to look at the life insurance, and that's when this thing took a back seat. But in 23-24, the action again kind of rekindled, and we actually started working on it in 24. And in the March board meeting, March 25, we got the license. I joined this company in April 2025. So we are just now 15-month old.
I mean, it's Fairfax-backed. What is?
So it's a majority owned by Fairfax, and we get good support from the Fairfax management. I think the way the Fairfax groups actually work is that most of the companies are all decentralized. They work on their own with a board of directors and the CEO, MD, and CEO in place.
And what's the idea behind Valueattics? You'll write life and P&C, or is it P&C focused at the moment? And I know you've been writing treaty, but do you also write facultative? What's the sort of business mix?
So initially, when we launched it last year, obviously the treaty season was over. We could not write any treaty, and majority of the business that we wrote was all facultative. And in between also we wrote around 5 treaties, which came during the mid-year. And so that has been the case. So our focus is to write both life and non-life. Obviously, the general insurance or the GI business piece is a much bigger one compared to the life piece. The business will always be more skewed towards the GI side. So that's how it's going to be. And that's how it was last year also.
And I know we've written treaty business at 1/4, the recent renewals. How was your sort of experience writing? What's sort of market response to a domestic reinsurer?
So actually, to be very honest, I think we were also a bit surprised with the kind of reception we got, because being a new reinsurer, we were not too sure what will be the kind of reaction from the industry. But we are quite happy because we got entry into nearly 17 companies in India, so which we felt was a fair one. Of course, we were very clear. We were wanting to selectively participate in companies and the programs. We didn't want to kind of rush into things in the first year in a big way. Our initial thing is to establish the relationship with the clients, and ensure that the clients have the confidence in us that in case anything goes wrong, these guys will back me up. And I think, to be fair, we have got a good relationship now going across with the 16, 17 series that we have written. The focus will be on building a sustainable portfolio. We are not kind of chasing the top line as of now, because we believe that we want to steady the ship first, consolidate our position in the market, and then go for numbers as we get settled over the years.
I mean, I was talking to people in the market at 1/4, and people were saying that Valueattics is already leading programs, which that has to come from the cedents, right? If you had to lead programs, you'd have to be.
Yeah. So basically, we are now leading 6 programs now.
Oh, wow. Okay.
Yeah. So that's when we had a discussion with the cedents, we were very clear that we wanted to check with them. Are you sure that you'll get placed 100%? Because we are a new player in the market, and they were very confident this year that with the kind of pedigree that you come with, and with the kind of reputation that you're coming into the market, this will be placed. And I think all the programs got overplaced.
This is on behest of the cedents, right? This has
absolutely.
Cedents has to, right. And in terms of the sort of programs that the lines of business that you're going into, is there a focus for you? I mean, is it largely property at the moment, or what's your focus from a business line perspective?
So I think one thing is that we want to focus on select lines. We can't be a player who's writing everything across the board.
Everything.
But obviously, the Indian market, the majority line is property. So you can't leave property away. Similarly, fire engineering. I mean, when you say property, I'm saying fire and engineering. These are the 2 big lines out there. And the third line is, of course, motor. Some of the motor quota share programs, Excel programs, we did get into it. Then the Risk Excel and the Cat Excel. So these are some of the programs which we have focused upon. Crop is one other thing which we wanted to look at, because we have a dedicated underwriter. These are the 4, 5 lines, and terrorism to some extent. We put in some capacity on the terrorism part.
The focus for now, you're not trying to expand too soon or spread yourself too thin.
We want to wait and watch, see how the market moves. And when you look at the other lines like marine or liability, I think the overall market itself is around 4,000 to 5,000 crores. It's not it's not a 20,000 crore market or a 30,000 crore market. So even if we get into it, our pie will be very, very small. So for the moment, we are playing it a low key in those lines.
I mean, it was probably a tough 1/4 to start off with, because the market has started softening. Also, we saw quite a lot of that gift city capacity coming to the market as well. I mean, when you launched, obviously, it was a much harder market, but the market is softening, and there's all that capacity. How do you see the Indian reinsurance market at the moment?
I think one is that it's a very, very competitive market. We also were trying to kind of focus more on the XOLs rather than the proportionals. Okay. So wherever we have tried to participate, we have tried to participate on the XOL lines. Because we see that, if you go into the proportional, then you're getting into the main line, where you may get directly hit with whatever the losses that could come in, because the overall underlying market is very, very soft. And I think worldwide also the same phenomena seems to be there. India may be much more softer than maybe the other countries. But what we felt is that even within that, if you who are willing to pick up specific companies who have had a history of good results. I think that's, as I said, our focus has been to do selective participation in specific companies. And I think that's been the clear strategy this year when we went into the 1/4 renewal.
And how do you see the market evolving right now? I mean, you write a lot of, you also write fact business from the market. Do you see that that fact book part of the business growing substantially this year?
See, I think the fact book will continue to grow because many companies want to cede away risks which they don't want to put into the treaty. They want to put it across into the market. But this year we have been a bit careful because last year the market was at a higher rate. Now it has gone down by nearly 20-30%. So the good part with facultative is that you can select. I mean, there is no compulsion to write everything. So we are also trying to pick and choose as far as what kind of fact risks we want to write. Because the underlying price has undergone big change. And I think that's one thing that we are very much wary of. And we may not be as, prolific as we were last year in writing those fact business because we want to be a bit choosy on that front also.
I mean, obviously, you said you become choosy on fact. You've not done a lot of proportional lines, which is basically the bulk of the premiums. So it's clearly a very selective strategy. You're not going for a top line target. So what is Valueattics' sort of medium-term goal?
I think when we started last year, the market was at a different level. I mean, at that time when we made some assumptions about the business projections and things like that, it was at a different level. Now, obviously, you know how things have changed in the last, I would say, 6 months or 7 months. So we are also trying to kind of moderate our business targets accordingly. We are not trying to say that, in this market, we want to be reaching 1,000 crore or 2,000 crore immediately. And that's where we are trying to moderate certain things to see to it that when the opportunity is good, we will jump into it. But now the whole idea is to just watch how things move. And when things get better, move into it.
And what about talent? I mean, how many people do you have now? Is it a challenge finding the right sort of people?
No, I think the good part has been that the initial senior management team of 7-8 people has been handpicked. They all came with me, and so they have been quite steady. Now, I think the next stage, when you want to get a specialist underwriter for a marine or a liability, I think there is a challenge in the market. But I would say as of now, we have got a team of around 38 people. So, which is, in the first year itself, we have been able to kind of build a team of around 38 people. But I do understand that going forward, and that too, our location being based in Pune, not in Mumbai, has got its own issues. But I see today that some of the people are willing to move, look at new challenges because they look at this as a startup company rather than a well-established company with 100 years or 200 years pedigree kind of a thing. But I think going forward, we do believe that there could be challenges. But our thinking has been that why don't we pick up young graduates coming out of the colleges or from National Insurance Academy and things like that, groom them, and then try to create the next line of leaders going forward. Because we'll have to find a solution. I mean, we can't sit across and crib about certain things which is beyond our control.
In terms of business you're primarily writing India business at the moment. Do you see yourself writing, seeding in business from other markets? Is there a market diversification strategy you have?
The first year when we came in, we wanted to do what we understand. I mean, we understand the Indian business. We understand the Indian risk. So the first year went in trying to look at the Indian business part. But we do realize that as a reinsurance company, you can't be holden to one region or one country. And I think this year we want to slowly look at some of the other places like the Southeast Asia or the neighboring SAARC countries. Look at maybe picking up small lines and then slowly move to other countries. I think the whole idea being a reinsurance company is that you need to have a diversified portfolio And we are very clear that, we will move towards that in maybe 3 to 4 years' time. But slowly this year onwards, we'll start looking at some of the risks.
You're part of Fairfax, and Fairfax has a pretty big reinsurance business in itself, Odyssey and all of that. How do you work with Odyssey? Is there a sort of a relationship you have? Is there sort of synergies with the sort of other Fairfax businesses?
I think the good part of this Fairfax group has been that they've got so many companies across the globe. We have been fortunate enough to get a lot of help from them. A lot of help as far as the business part is concerned. Like if we are today wanting to move to any of the SAARC countries or any of the Southeast Asian countries, some of the companies are already present over there. We are getting good guidance on what are the things that you need to look out for. What are the things which are, something which are a no-go? I think these are some of the things where the group as a whole is helping us in our venture going overseas. In India, since we have been already there, I mean, most of the senior management team which we have already had nearly 18 to 20 years of experience. I think we understand the Indian risk much better, but obviously for the overseas risk, we don't have that experience. So we are tying in on with the experience of our group companies and try to get the best practices out from them.
The other domestic reinsurer being Allianz Geo, that's coming up. And there it's pretty clear that Allianz Re is sort of giving them a lot of support from Singapore and with the underwriting side of things. And there's AGCS, from a facultative perspective. You obviously have to sort of build everything from ground up.
Obviously they have a bigger advantage. They are a big group company. They are, I think, one of the world's largest reinsurers. So obviously from that point of view, they have an advantage. But I believe once you get into the market, everybody is equal. You have to fight out for your space in the market. And I think we are, reasonably ready to look at that fight.
Okay. And will you be able to share any numbers in terms of premiums or, what you've written so far? Or
So basically, last year, if you look at it, I think our financials are already out in the public domain. So last year we closed around 228 crores.
Okay, GWP, right?
GWP, yeah.
That is for FY26, which ends
25-26.
25-26. Okay. Yeah.
And this year, I think the way the GNPI numbers have been given to us by the different cedents and looking at maybe if we believe that if they achieve that, I think this year we should cross maybe around 550 crores.
Or double the GWP this year from the treaty business, obviously. That
treaty
helps.
Treaty. And on 1st April also, we had written some of the facultative business. So when you add all this together, around 550.
550.
And during the year, we'll have to see how much we write from agriculture or other lines. But we are also a bit careful on the agri. We are not going too much aggressive on that because of the El Nino impact that we hear about. So bit cautious on that particular line of business. We don't want to go too overboard on that.
Okay. I mean, that's the government program which is coming up. The Fasal Bima and all of that programs which is coming up for in the next couple of months, right? It'll be up.
It's already started. A couple of companies have already gone into the market. So it's already started.
And that's going to be a big opportunity in terms of premiums, right? I mean, I was hearing that it's going to be.
So we'll have to wait and see because last year it was too competitive. The premium came down by 40%. So I don't want to get. So I'm not too sure how this year is going to be.
I mean, quickly, just in terms of the opportunities in the market, quite a lot that people are talking about is emerging sort of risk. I mean, lines like surety. That's been a big topic in India from a reinsurance perspective. Do you write any surety? How do you see that opportunity?
I think surety is a big opportunity. We are leading 2 surety treaties.
Oh wow! Okay.
So we do see it as a very big opportunity. Currently, we are participating in, I think, 5 or 6 companies.
Right.
2 we are leading, others we are following.
Are there any
So
challenges to that market? I mean, a lot of
obviously the
internationals
challenge.
have not been that convinced with the surety market in India so far. So, when you talk
No,
to
I think
the big boys, they're saying, "Oh, we will rather wait and watch." Yeah.
I think in India, I think the issue has been the unconditional aspect about
Yeah.
the surety business, where unconditional guarantee has to be given,
Yeah.
because what the clients want is a replica of the bank guarantee. They
Right.
don't want
Yeah.
any changes to. In bank guarantee, they have got an unconditional kind of a guarantee available to them, and similar thing they want in the surety business. The only aspect that one is wary of is that with so many companies now coming into it. So
Hmm.
earlier there were only 3 or 4 companies. Last year there were 7 or 8. Now there are 12, 13 companies. So with more and more companies, more capacity coming into the market, pricing pressures will
Pricing
start
pressure.
coming in. So I think that's the only concern. Otherwise, I think the market is very big because it's we are just scratching the surface as far as current treaty business is concerned, and we will have to slowly take steps to see to it that we don't kill that market. So I think that's
Right.
the
That's
issue.
that's the key. Cyber has been the other big theme in India.
Yeah.
People have been talking about it. Do you write any cyber or
So
no?
cyber, as I said earlier, also we want to have somebody who understands it as a liability underwriter or something. So currently we don't have a dedicated underwriter.
Hmm.
So as soon as we get someone on board, we will start looking at it. But currently the whole idea is to say that we also say, can we write maybe on the third excess or fourth excess? The premium may not be that big,
Yeah.
but
Big. Yeah.
primary, first excess, second excess, and all, I think you really need a good underwriter to understand the scheme of things and understand the exposures that are involved in it. What are the challenges that could come in, claim experiences, and things like that. So currently, we are a bit away from writing all these the cyber exposures.
Is there anything you want to add, or do you want to talk about the broader Indian market, the opportunities there, or anything that I've missed?
No, I think as I said earlier, we are in for a long haul. We
Hmm.
are wanting to be a long-term player. We want to really look at things year on year. We want to be a profitable company. At the end of the
Hmm.
day, it has to make money. Otherwise, what is the point in getting into this kind of a business? So the whole idea is to preserve our capital, to see to it that we use our capital judiciously, write the businesses that we understand, uh,
Hmm.
try to steer away from things which we don't understand, unless we get some kind of expert on board who can help us understand these things. And I think Indian market, I mean, as we see now, there is a soft market, but we do believe in 1 year's time or 2 years' time, things will evolve and things will change. Because a lot of people keep asking me, was it the right time for you to enter this line of business? But I believe that there is no right time or no bad time or a right time to get into business, because at any point of time you'll get stuck in
A
that
cycle.
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 That
Yeah.
cycle will always come.
Yeah.
Maybe for us it is better it is come in the right in the beginning itself, so we do know what are the things we should not do as we go forward. And I think that should help us. So I believe we are in for a long haul, and I believe there is a big market out here, not only here, across the world. As you rightly said, that we should also get into a diversified market.
Hmm.
We believe if we do things sensibly, we will be able to do better. That's
Right.
the thought process, and I think the stakeholders, the shareholders, everybody believes in that we are in no hurry to touch a 10,000 crore market or a 20,000 crore market. We want to take slow steps, steady steps.
And there's no shareholder pressure to perform or exit, because Fairfax obviously has a sort of a long-term
Yeah.
investment horizon. So there's no
No, there is
exit
no
pressure.
pressure. Absolutely no pressure to kind of scale up things in 2 3 years time. They only want to see to it that do things sensibly, ensure that use your capital judiciously, and you make best use of the opportunities that come your way.
Can I ask you why are you based in Pune? What's the background to setting up in Pune?
So basically, I worked in Bajaj Allianz for 23 years.
Yes.
Many of the people, at least 3 or 4 people who work with me, they were all based out of Pune only.
Hmm.
And we realized that for a reinsurer, it hardly matters whether I sit out of Bangalore or Mumbai or Delhi or anywhere. Anyhow, I have to go to the ceded. So whether they're based out of Chennai or Calcutta or anywhere, I still need to travel. So we felt that it didn't make much of a difference because as a reinsurer, you only go to the cedents. And Pune, the advantage is that the real estate is much cheaper than Mumbai. So you get a bigger, much bigger space and a bigger place to get your team in. So currently we have a space where we have got around 55 seating area. Okay. And we believe that should work out for next 3 to 4 years. So I think that's all well set.
You said you had about 38 people. Is there any plans to grow that headcount?
Obviously, I think this year, I think a lot of our guys have done multitasking. So they were doing underwriting, they were doing client management and things. Now with all these 16, 17 cedents coming in place, obviously we need to kind of, add more manpower to that team. So I think we'll add another 5 or 6 people this year. Not more than that. 4 or 5 at the most.
And that's all the questions I have. Certainly look forward to meeting you in Singapore. And,
sure.
Thank you very much. It was fantastic talking to you, Mr. Ramalingam. Thank you.
Thank you, Varkey.
That's all from us in this episode of Between the Lines. We'll be back again in 2 weeks. In the meantime, you can connect with us on LinkedIn. Make sure you're subscribed to our daily and weekly newsletters delivered straight to your inbox. And of course, we'd love to hear your feedback on the podcast. Email us at editorial@insuranceasianews.com. I'm Mithun Varkey. Thanks for listening.